we are otherwise interacting with all of you in between. But we thought like it is important to request all of you to come to this premises, especially on this day, because I still recollect in March 2020 when bank was put under a reconstruction scheme, and we had a physical meeting. I think that was the time when the COVID impact started happening. We had the large gathering, everybody was wearing a mask, and everybody was gone. But I think that was the time when a bank of a reasonable big size balance sheet was put under the reconstruction. And there were multiple challenges before the bank. And on 15th of this month, that is on the last Friday, I think this is the first time where a financial institution of this size has been able to come out from the reconstruction scheme for. So today, Yes Bank is not under the reconstruction scheme of Government of India. I think this is a very, very important milestone. And not only in India, I think even globally, we have not seen a large financial institution coming out from the reconstruction scheme successfully and moving on the growth. If we just go back to say March 2020, I think one of the very large challenge before us, our deposit book has come down to 1,05,000, and our CD ratio was 166%. Entire country was under lockdown, so all businesses, everything was closed. And initially, the Reserve Bank of India has given us a support in the form of a line of 50,000 crores, and which we were supposed to repay within 6 months. Those were the challenging times, and when we started the journey, the first was in terms of building the deposit book, improve the CD ratio, get the confidence and the trust of the customers back. We are very happy to share with you that as on 30th June, the numbers have already been shared. Our deposit book has moved from 1,05,000 crores to 1,93,000. Not only the deposit book has increased, but also the CASA ratio has improved by 500 basis points. It was 26%, which is now 31%. And in respect of the confidence and the trust of the customer, today bank is opening more than 1 lakh new saving and current accounts every month. And that shows the confidence of the customer back into the bank. And this 2-year journey, when we were building the liability book, we were also continuously reducing our rate of interest. And our cost of deposit, or the cost of funding to be more precise, has come below 5% for the first time as on 30. So I think this was the major thing which bank has to do, and we have done it successfully. And our CD ratio, which used to be 166%, has now come down below 100%. And this is as per our strategy. We would like to keep it around 95%, and we have reached. The second challenge was after initially our capital ratios came down drastically, and we were breaching the regulatory part also, despite raising capital from a group of banks. And we have gone for a largest FPO in July 2020, and we could raise 15,000 crores at that point of time. I think that was another milestone in July 2020 when we raised 15,000 crores, and our capital ratios becomes comfortable, which can support the growth, future growth of the bank. The third thing was that we could repay the Reserve Bank of India the 50,000 crores line which we got before the deadline. So I think something around 13, 14 September, we were able to repay, whereas the outer limit was 30th September. So I think in that journey, we were able to do this. The another big thing in terms of growth, how we can increase our loan book to grow. And last financial year has been a landmark for that, where we have disbursed more than 70,000 crores across all the segments, large corporate, medium enterprise, retail, MSME. But the strategy is absolutely on the loan book. We are trying to make it more granular. So when the strategy in terms of giving a higher focus on the retail and MSME, instead of 60-40, which was there in corporate and retail, we have already moved to 40-60, 40 corporate and 60 is retail and MSME. But simultaneously on the corporate side also, continuously we are working in terms of granularizing the loan. So our single exposure to a unit, irrespective whether they may be very good, we have been able to reduce. And despite such a robust 70,000 crores loan disbursement, for the FY22, our loan growth was somewhere around 8.9%. And the reason was that despite growing 28% on the retail and MSME, growing 35% on the medium enterprise, our strategy of debulking and de-risking of the large corporate has actually resulted into a lower loan growth of 9%. But if you see as on 30th June, our loan growth is already 14%, and we are fully confident that the guidance which we have given, that for FY23, our loan growth would be at least 15%, where 25% contribution or 25% growth would be coming from retail and MSME, and 10% growth coming from the large corporate. So I think we are absolutely on track. Another big issue with Yes Bank was in terms of FI20 and FI21, there was huge losses. After fixing the issues on the liability side, on the capital side, and also in terms of making a continuous recovery, so last 2 years we have made a recovery and the upgradation of 13,000 crores. The bank has been able to declare a profit for the full year. And if you see all the 4 quarters of the last financial year, there has been a consistent improvement in the profitability. And after 2 years of losses, we have been able to declare a profit of 1,066 crores for the FY20. So currently we are quite confident and optimistic that the guidance which we have given for a 75 basis point ROA at least for the FY23, we are on track of it, and we would be able to achieve, along with a loan growth in line with the market, and also continuously building the liability book with a larger share coming from the CASA. These were the major things which has been done, but I think still bank was grappling with a issue in terms of a large GNPA. Our GNPA number was somewhere around 14% as on 31st of March. Though the net NPA number has come down to 4.5 because we have already made 81% provisioning. But I think this was something from 3-4 different perspectives why it is important to tackle this issue. And I would like to go back to August 2020. Because we were very clear that recovery of such a large NPA pool within the bank would take a very long time. And optically, nobody would be comfortable if they deal with a bank where the gross NPA number is 15, 16 or 14. Within the constraints of our own legal system, also the challenges which has come because of the COVID, we were fully conscious that taking out this part would take a very, very long thing. And I think it was important for us to find out a solution around. In August 2020, we engaged with EY India as a transaction advisor for advising the banks what is the best course, how we can come out from this 14%, 15% GNPA. There can be multiple options. One option can be you continue to make recoveries in the bank, which would take definitely a very, very long time. The another option could be you start selling your asset to the existing ARC. That was also one of the options. But then we started thinking, if you see the ARCs which are there in our country, nobody has that kind of capital which can take care of such a large pool of the assets. That was one part. Second thing, if you see in terms of past experience with the ARCs, has not been very encouraging. And the mostly ARCs, the governance part was something which was always in question, barring maybe two, three good ARCs. But because of the lack of capital, and also nobody was willing to look for the entire pool. Everybody wanted to go for cherry picking, only pick up the good. So I think that was the time when we took a call that why not to have a partnership? Why not to have a partnership with someone who has a expertise globally, who has the right kind of money to support these kind of transactions, and who would be willing to take the entire pool. We were also thinking that if we can do the partnership, because Yes Bank is also has that proven capabilities in terms of recoveries and the upgradation from the existing pool. We know those assets very well. With this kind of experience within Yes Bank and also having a partner who is having the global experience and also the right kind of capital available, we thought why we should not try to form a joint venture. A joint venture which not only takes care of assets which are offered by Yes Bank, but how this joint venture as a platform can also take care of the stress asset which are there in the other financial institution in the. We were thinking like why not make it as a business case. A bank always go for some kind of business which is other than pure banking, like maybe the insurance, maybe the mutual fund. But I think we thought this is the right time, this is an opportunity to create a credible platform in the country which offers a solution around the stress. And the most important part was more in terms of accumulating all the stress assets from the different banks. And I think on the similar thought process, the government of India has also set up the national bank. Our thinking is, can we also establish a platform, the similar platform in the private banking? And in our country, when we have a very, very large stress asset pool, it would be good for the financial system if there are multiple platforms which are available, who are experts, who have the intent to do the recoveries and also do the upgradation and the restructuring instead of using the ARCs only as a way. This was the thought process. And in August 2021, after 1 year when we were exploring all these kind of options, and why I'm giving all these dates, just to communicate that it is not like a decision has been taken in haste. I think we have evaluated all kind of options which are available, and then we reached at this. In August 2021, we invited expression of interest from the large players. We got a very good response. We got EOI from 13 large global players. We engage with them individually, try to understand what is their thought process about this platform, what are their financial capabilities, whether they would like to have this business going beyond Yes Bank. After multiple rounds, we shortlisted four, and out of four, we finally selected JC Flower, who have a ARC. So I think that was also an additional advantage that there was no need to go to again Reserve Bank of India for getting a license for the ARC. This ARC is already there. The only thing would be we would be investing as a partner in that ARC. During the first year between August 2020 and August 2021, we also reached out to regulators in terms of taking their guidance for this particular state. Because this was the first time in the country which was done. So I think it was important to have the guidance from the regulator. We got the guidance from the regulator that they would support these initiatives. The only thing was that as a bank, we would not be permitted to invest more than 20%. Because initially, when we started this thought process, we were thinking that why not to go for a majority, 51%. If there is an issue with the majority stake, we were happy to go even for 49%. But we got a guidance from regulator that as a bank, you would not be permitted to invest more than 20%. We are exactly going by that guidance and at the right time, because after selection of the partner who becomes the bidder for the base value, we have already launched on Saturday a Swiss telling process where ARCs with the financial capabilities and the expertise they can participate in the Swiss telling, and depending on the Swiss telling process, whosoever would be the final bidder, the entire stress asset pool of approximately 48,000 crores would be assigned. So I think this is exactly what we are trying to do. But this is a big milestone for us, where we have been able to find out a partner. There is a thought process in terms of a joint venture, where not only the joint venture would be able to do the recovery and resolution for Yes Bank, but over a period of time, if we can also make it as a credible platform for the recovery and resolution of the stress asset in the entire banking. And we think we are in that right position, and our country, our economy deserve to have multiple such kind of platforms. I think this is somewhere we are now trying to resolve only one problem which left with us in terms of such a large growth area. We thought like this is important. You supported us, all of you supported us in this journey for last 27 months. When we started the journey, all of you were present. We thought like now we are formally coming out from the reconstruction scheme, and we have been also able to find out a solution for our only problem left with us to tackle the GNPA number. We thought it is a good time. We would again request all of you to come and share. So thank you so much for coming here, and now we are open for the kind of.
Could you give us the financial details of what the base bid from JC Flowers would be on which the Swiss challenge would be held for this 48,000 crore pool, and how much of that is already provided for this 48,000 crores by Yes Bank?
So out of 48,000 crores, our provision is 81. 81%. So if you see our net carrying value in our balance sheet of this 48,000 crores, it is something around 8,300. And the base bid is 11,100.
11,000?
11,100.
100.
Sir, the, the question you earlier in your commentary, you mentioned that the, the experience with the ARCs has not been that great across the banking system. Um, that's primarily because they don't really resolve things and it's mostly a warehousing sort of option at this point in time. But what is the benefit with JC Flowers apart from the fact that they have the capital? Because it's not like they are known to be resolving distressed debt, they are into buying into distressed companies. What do you see as the benefit of partnering with them in terms of the outcome of the resolution?
So I think that fundamentally, if you see why the ARCs are not able to do this, there is a issue on the governance side. There is a issue on the governance. There is also a issue on the intent. This partnership or this joint venture, not only having a name, credible name, global name, and I think we also need to appreciate they also have their own at the stake. Okay. So their own credibility is always at stake. They would also like to make returns out of their investment. And during our interaction with the various partners, I think the most important thing was in terms of what is their thought process for this platform. So by and large, we are quite confident. Their thought process is not about a transaction. Their thought process is in terms of providing a platform where with the expertise, their own expertise and the expertise sitting within Yes Bank, how we can work together and make the most of it. So it is not like the team going there, but if the ARC want some specific resources, and if those resources are also willing, we'll take the.
Hi, sir. So just wanted to check one more thing. You had mentioned that one of the thought process behind the ARC was that also this can buy, stressed assets from other lenders as well. Just wanted to understand, if there's a pool that you are looking at right now or in the coming future, if you could tell us something about
No, I think that would be too early for us. Okay, but we know there are assets which are sitting over multiple. So I think it is important for any resolution platform to accumulate, aggregate all those assets from different financial institutions so that the decision making happens. Today, one of the problem is that if in a consortium there are 13, 14, 15 banks, decision making goes for it. And I think that was the fundamental thought process behind the national act.
you have now transferred to the ARC whenever your Swiss challenge will be done. A lot of these assets have investigative agencies, probe going on. So, do you believe that this would, potentially be a deterrent for rehabilitation or resolution of these assets? That is one. And second, when we met last month, you said that any potential strategic partner would want a clean balance sheet. Now that the balance sheet would look much cleaner, would you be able to resolve the entire capital raising exercise, and by when would you look at closing it?
I think your first question in terms of external agencies, law enforcement agencies, I think that is something which is known, which is in public domain, which is known to the partner. And if there is any action from any external agencies on any asset, it does not impair or interfere with the recovery of the resolution. So that is absolutely we have not seen within the bank also last 2 years. We have been able to make recoveries and are able to do the resolution even when there were actions from the external. That is one part. Second thing in terms of definitely when the investors would be looking at the balance sheet post shifting of the pool to the ARC, I think for any investor, this would look like a very clean bank. A bank which is having a very good platform franchise, who is able to build both on liability and on the asset side. They would be looking at a bank where every third digital transaction of the country is being processed through yes. I think this kind of platform for any investor would be difficult to find out, where you know, like, this is a bank which is growing, where everything is well, barring some mistake which happened on the corporate side, but digitally also this is a very safe. Otherwise, our market share on the business side is just 1.5%. But if you see the digital transactions, every third digital transaction is processed by us. We have a market share of 43% in UPI. We have a market share of 18% on the Aadhaar enabled payment service. We have a market share of 14% on the NEFT. And we have a market share of 12% on the IM. That shows the confidence of the different financial entities when they are routing all these transactions to Yes Bank, and it has been done successfully in a series. I think these are some of those things where any investor, we believe, would be looking at this franchise in a much more.
You believe all this will bump up your bank's valuation?
We think so.
Because the stock market doesn't think so as of now.
I don't understand the stock market. You would be knowing better. We believe only in one part, the performance part. On the performance side, if you continue to do well, I think one day the people would recognize.
So with the Swiss challenge already been launched, as you have mentioned, how much time do you think now ARC formation will take? And has the regulatory approval already come for that, or you need to go back again and take approval?
So as I was explaining, there is no regulatory approval required because they already have a ARC.
Right.
Regulatory approval for us would come when we would like to invest beyond 9.9. Up to 9.99%, we are free to do that. But when we would be investing beyond 9.99, we need to go to RBI for taking that. But fundamentally, the entire context around this transaction, we have taken the opinions from legally as well as from our transaction advisor. This is in sync with the entire regulatory guidelines around these kind of things. That we can do only after the successful winner through the Swiss challenge.
And how?
So that would be very small thing, because ultimately this transaction would be 1585, where out of the assignment value of 11,000, 15% would be coming to us as a cash, 85% would be sitting as a SR. But since the assignment value is more than the net present value of our asset, so it means we would be carrying extra provision now on the SR. So going forward, even the requirement of provisioning on the SR would also come down for us. And any recovery by the ARC, which is more than the assigned value, we would be getting 75%. Because if any ARC recover more than the assignment value, 80% of it has to come to the SR. And even the remaining part, since we would be having the 20% equity holding, that would also be shared.
So of the how much time total you believe that? Yeah, sorry.
So the total time would be somewhere between 60 to 75
60 to 75
days.
Okay. You means this whole quarter?
The whole.
Right. So of the 40,000 crore that you plan to sell here, 40,000 crore that you plan to sell to the Swiss challenge. Now, would the entire thing be as a block, like the other company that bids for it under Swiss challenge, will they have to take it together, or will it be piecemeal? That's one.
No, it has to be together. It has to be together.
Okay. And secondly, sir, if you would just give some number as to how much you would invest. I know, I mean, to ask that, how much you would invest right now? What is the amount that you would invest?
How much would come as a capital?
Yeah, how much capital would you?
How much would be that amount?
The investment would be 10%
To begin with, 9.99% of the 15% of the assignment value. So if you're talking about 11,000 crores into 15%, into 10% will be the immediate infusion. And anything in excess of that will be subject to regulatory approval, maximum up to 20%. But that investment will only happen, as like sir mentioned, will only happen post the consummation of the SIS auction, that there is clarity that the bid has been won, and then you put the money in.
So fundamentally, you can say like 15% cash would be something around 1600, okay? And you will say 20% of 1600 would be the capital.
So 20 or 10% now, because initially
Initially 10. Initially 10, I am saying even when we are going even for 20, so 20% means something around 350 crores.
also, right, sir, also in that case, since it is subject to the Swiss challenge, the investment, what if hypothetically some other ARC bids more than that? So in that case, how will you invest in this?
No, if suppose theoretically, and there is a possibility, why not? If any other ARC bids a higher value, the entire portfolio will go to them, and then it would depend on the between two of us whether they would like us to be a partner in that. We don't have a right. We are not going with a Swiss challenge where the ARC has to have us as a partner with a 20%. We can't have those things. So I think it would be depending on what kind of conversation happens subsequently.
Thank you.
Now that you've come out of the restructuring, has the embargo on your shares, would they also get lifted prior to March? Is that something as a possibility, sir?
So I think the first thing in terms of we would be the residual NPAs would be something around gross NPA of around 2% kind of thing, 1 to 2%. The embargo on the share part would not be over because this would be specifically March 20 as per the reconstruction.
And I'd also like to understand how much of incremental loan additions have happened since March 2020 till possibly Q1 FY23, and how much of total write-offs have happened during this period, sir?
So I think this is something which we need to wait for the declaration of quarterly results. Okay. I'm not supposed to share those.
So, but these are all historic numbers also.
No, it's not historic. You are talking of the quarter one now.
Yes, quarter that is just
June.
closed
June.
by
This close by.
Q1. Yes, sir.
So we are going to declare our results of quarter one on 23rd of this month. After that, we would be in a position to share.
Okay, let me flip the question in that case. So, would you have added more books to your loan, to your assets, compared to what have been written off so far?
So you are talking about addition on the NPA or you are
Your
standard?
total
Loan
loan
growth.
books, sir, on your asset side.
So
Have you
on the-
added more assets than what has been deleted so far?
So absolutely, if you see our loan growth for the quarter one has been 14%. That is the number. I think all of you also know much better than from me that what are the regulatory constraints on me. So please respect that.
So,
Yeah. So basically, our partnership is only with the JC firm. Right? When we are going for the Swiss challenge, we cannot put this stipulation that a successful bidder also needs to have a partnership with JC. The process of Swiss challenge is only to find out in a transparent way the real value of this project.
So to clarify,
does not matches the bid. Whatever the preferred bidder goes for higher bid. In that scenario, your partnership may or may not happen.
So as per Swiss challenge process, if somebody bids a higher amount, they have the right to match. If they are able to match this, then the existing construct will go on. But suppose they are not able to match that, then it means like whosoever would be the successful bidder, the entire pool would be assigned to them.
And in this respect, you will remain a 20% partner of JC Class in the ARC and will look to acquire other things in the long term.
Sorry.
Irrespective of the highest bidder fee,
Mhm.
your partnership remains with JC Class as 20% ARC.
No, our partnership would come into effect after the conclusion of the Swiss challenge process.
So new conditions may be there after Swiss challenge. That is a possibility.
So it's not about condition. I think it's simple. If somebody is bidding for a higher amount, they have loan pool has to be assigned to them. Now it would depend whether they would be willing to have us as a partner,
So is the
or
sale,
whether we would like to be partner with them. It also depends because ultimately our reputation is also at stake. So depending on the counterparty, we would take a call whether we would like to partner with them, and it would also depend on them whether they would like to partner.
A hypothetical question. I mean, suppose this somebody else comes, as you mentioned, and goes for a higher bid, and you cannot partner with that. In that scenario, as you mentioned the options earlier, would you like to go for an ARC or kind of a structure, or you are? I mean, you want to have your own ARC only? I mean, what is the thought process there?
I think we'll take that decision, no, once we reach at that stage. But I think we still believe, जैसे somebody was tell you, आज की डेट में जो सबसे प्रॉफिटेबल बिजनेस है वो कबाड़ी का बिजनेस है. So I think that we will keep in mind, and at the right time we will take that.
So will the sale happen only if you get a 20% stake, or even without any equity stake, you'll go ahead with the sale?
Absolutely. So there is no such condition.
So even if the 20% doesn't come through, the sale, this process is final, the existing current process.
You are saying if there is somebody else as a bidder.
No, I was saying that if for any reason the 20% stake doesn't happen in the ARC, if you
But
do
why
not
you are
get
saying that?
if you all do not get a permission for a 20% stake in
So at least we would be having 10%. Up to 9.99, there is no
So you will
issue.
still go ahead.
Yeah.
And in a worst case scenario, what will be the provisioning requirements on the SRs? To what extent are they already provided for? That's my question.
So, like I was saying, the entire pool, we have made a provision of 81%. Assignment value is higher than the net present value. So, it would further increase my provisioning. So, my provisioning on the remaining SR would be as per the aging of those entities. So, today provisioning requirement on the SR is equal to provisioning requirement of a entity.
So, just a slightly more technical question about this entire structure that you're talking about. I'm just curious, you're paying money to the ARC to pick up stake, and that money is being used to pay you back as part of the cash consideration. I'm just trying to understand how this is not a sort of a moral issue in this transaction.
So there is no moral issue in this transaction because this is not like if we are partnering in this, okay, we would be putting something around 350 crores kind of thing, whereas the total money which would be coming to us would be around 60. The moral issue would come depending on the governance structure of this ARC. I think this ARC would be running as an independent entity by independent board, where the majority of the directors would be the independent. And I think that's why the focus from our side was more in terms of a very strong governance in the.
But Yes Bank will have a representation.
Sorry.
But Yes Bank will have a representation in the ARC in terms of board structure.
Yeah. Will.
See, you would be picking up stake in the JC Plus current ARC, right? So help me understand what is the current shareholding pattern, and once the switch challenge is done and assuming JC Plus won the bid, then you're going to look at picking up the stake. So what would be the shareholding then, assuming 20% holding? What is the current?
Unfortunately, we don't have our partner here who can answer this question. But from our side, we have done that due diligence that there would not be any issue in terms of picking up that 20% stake in there.
So it would be 2080.
Yeah,
2020. And out of this 48,000 crore of assets, how many accounts? And could you also tell us if most of these accounts are in the consortium format? Because if you said
they would also look at picking up assets from other lenders in the lines on the lines of NARCL. Would that be the first set of accounts that you would be looking at?
So I think it makes sense what you are saying, that once this platform would start working, and any asset which is under a consortium, so this platform would definitely on a priority basis would like to see the interest of those banks where there is a common asset, because then the resolution becomes much faster.
Can you help us with the number of accounts would have in the consortium format?
I think we don't have that number immediate, but we can share with you.
And in the 48,000 crore, if that
No,
number
I'm
is-
saying in 48,000, you are saying number of accounts,
Yeah.
number of accounts where there is a consortium.
or the total number also will do.
So that is exactly what I am saying. We would share with you subsequently. Immediately, we don't have that.
Okay. So just to clarify, after switch challenge, the state pickup will happen, right?
Yeah, exactly.
Okay.
Yes.
Thank you.
Because